Good to be with you, Dave.
And now joining us, sort of preaching to the converted here, financial analyst and author of this book, Crash Proof, my friend Peter Schiff. Schiff joins us now. Peter, tell us specifically, let's start with that lady. Now, a woman who has done something that is not necessarily advisable by Dave Ramsey and other people who argue against that, managed to do it, pull it off, and succeed in growing a fine business. She's obviously an exception to the rule, but should she be prohibited from doing what she did?
I don't think she should be prohibited, but the problem is most people who are borrowing on their credit cards are not doing it to build businesses. They're doing it to buy things that they can't afford. And unfortunately, Americans have simply borrowed too much money on their credit cards. And I think there's a real crisis brewing in the credit card industry because over the last few years, Americans have been able to extract their home equity. And they've used that home equity to pay off other debts like auto loans and credit card debt. But they can't do that anymore. And what Wall Street did with credit cards is they securitized them the same way they did with subprime mortgages. And what's about to happen is people are going to have a difficult time making their payments. Now, you know, the credit card companies are jacking up the interest rates. That's going to make it even more difficult. Eventually, there's going to be huge losses in credit card debt. And the losses are going to hit the industry just like subprime. And then the lenders are going to pull back. And the credit is going to be tightened. And people are going to find that their limits are going to be reduced, and it's going to be very, very difficult for Americans to charge anything on their credit card because the lenders who are going to be hit with these horrendous losses are going to pull back. They're not going to want to buy this paper. Just like you can't find people willing to make subprime loans, people aren't going to be making loans for credit cards, and the whole thing is going to collapse.
So these things, correct me if I'm wrong, but you're talking about asset-backed commercial paper. This is commercial paper that consists of debt, a lot of credit card debt that's divided into thousands of pieces and sold to various financial institutions all around the world.
Sure. Remember, Americans can only borrow money because somebody else is lending it to them. And Wall Street was able to securitize all this credit card debt and sell it all around the world to people who thought it was a high credit quality because they had all the diversification and it was securitized. But it's only appeared to be good because of this real estate bubble, which enabled people to stay current on their credit card debt by borrowing against their house. But that lifeline is gone, and a lot of these debts are going to go bad, and this market is going to blow up. And then you're not going to have all these credit card offers coming in the mail because the people lending the money are going to get burned and they're not going to want to keep doing it. And, you know, the whole thing, the whole concept of people borrowing money to take vacations, to buy television sets or apply, this is nonsense.
Right. Well, let me just say something that's going to shock a lot of people who know you, are familiar with your stuff. This is from your book. There is nothing inherently wrong with having debt. It's something that you just said, as a matter of fact. It all depends on the purpose for which it's incurred. When individuals borrow to consume, there's no income-producing asset that's acquired. Therefore, the loans can only be repaid out of reduced future consumption. So if you're using debt to start a small business or even to buy a car, that could be a good thing. But if you're using it just to consume something, that's bad. Is that the summation?
Certainly. I mean, consumer credit doesn't make any sense because if you buy an asset, I mean, if you buy a product like a television set, how are you going to pay for it? I mean, the television set doesn't generate any revenue for you, so the only way you can pay for it is reducing your consumption in the future. The way our parents used to do it, if they wanted to buy something, they saved up. And then they earned interest while they were saving. And so things cost them less. I mean, you know, people used to put things on layaway. I mean, now Americans buy whatever they want. They put it on a credit card. And then like the women in these clips, you know, they end up paying 20 or 30% in interest over the life of that loan. They're paying for that that television set 3 or 4 or 5 times over.
Peter, stay with us. We may need your expertise as we turn to our board of directors. Jim Pethakakis is with us. He's from U.S. News and World Report. He's the assistant managing editor. Evelyn Rusli, she is Forbes market reporter. And Eiley McConnett, she is Business Week staff editor. So, Eiley, is there anything that you've heard so far that you disagree with, particularly Peter Schiff?
I think more it's a question of focus. What I'm really interested in is how some of the proactive companies like Citibank that has stopped this, you know, the surprise interest rate increase, how they're going to use this. Because if you think about it, there is a publicity or PR opportunity here. You could imagine them having advertising highlighting this practice and then showing what they're doing to counter it.
Evelyn?
And I think that what's really important here is to understand that even though the consumer needs to wise up,
there also needs to be more transparency in this industry. In Bank of America, Discover Card, they need to tell their consumers what they're in for. I mean, otherwise, then they're going to default, and that's only going to make the subprime crisis even worse.
But, Jim, isn't that exactly the point? The fact that a lot of the details of these things you're getting into when you borrow money on a credit card are in such tiny little print at the bottom of your statement that there's no way you could read it even if you wanted to.
That's right. You got to bring out the magnifying glass. Look, companies should be able to charge, whatever they want, more or less, for products, as long as people understand what they're paying. So I think more transparency. Maybe they ought to get, Warren Buffett. He writes very clearly those annual reports. Maybe get Warren Buffett to write out these agreements so people can understand them. But as long as people understand them, then I think it's their own responsibility to make sure they don't take out too much credit card debt. Exactly what Peter and Dave Ramsey were saying.
Well, Peter, let me go to you. Dave Ramsey, of course, is against government intervention here. Do you think that government should play any role in terms of capping interest rates, or which essentially amount to price controls on banks?
Well, we used to have usury laws in this country, and I think the usury rates were a lot lower than what is being charged now. But no, I don't think the government should get involved in this. But also, the government has really been subsidizing it in a way where, they used to make the interest on the credit cards tax deductible, but now people are able to borrow money on their homes and pay off this debt. So the government still kind of gives you a subsidy for borrowing money if you happen to own a house. But no, I think the government should stay out of it. But ultimately, we have to move away from this credit card debt, and it's going to happen. These loans are very risky because there's no collateral behind them, and people have no assets. So there's a lot of defaults, which means the people who do pay end up having to pay usurious interest rates because they have to pay for all the people who don't pay. And, of course, all this credit card borrowing is hurting our economy. It's hurting our economic growth because the money that consumers are borrowing is money that entrepreneurs can't borrow. And so they drive up the cost of debt for businessmen who would actually create companies and invest in capital investments.
Peter, I got to leave it at that. Peter Schiff, author of Crash Proof. Of course,